All right, well, let's go ahead and get started tonight, guys. We're going to be wrapping up part two of this presentation talking about business credit game. There's going to be a number of places that we're going to be covering on where you guys can get funding because there's a ton of different funding out there, but you just have to ask yourself, is this going to be the right thing for me? Because, if you don't understand the terms, that could really get you in trouble because that's one thing that I struggled with in the beginning was I didn't understand the terms for all of these different types of business funding that are out there. And a lot of people can say, "Oh, I can get you funding, I can get you funding," but we have to understand there is a number of different types of funding out there. So we have to understand the different types of funding that's offered and how to go about getting it. So we're going to be covering that. Number one thing that you guys have to understand is the funding framework. So this is going to vary based on the type of business that you are, right? And sometimes it's hard to hide that you're a trucking business, right? So some banks out there might not work with trucking or transportation, and that's fine. There's a lot of banks that do, so that's not a problem. But you just have to kind of understand this going into it. You also have to understand that there are different geographic, banks out there. So, for example, Truist Bank. I'm in California, so I can't get Truist Bank unless I were to get a location by one of the Truist Bank's branches. So, if you want to get access to funding, sometimes you have to open up a foreign entity in the state where that bank is located and get an office in that location. And what I would recommend is definitely trying to find a legitimate business location, like a brick and mortar, like a small business location out there, and just ask them if you can, put a mailbox in their location and use it as a virtual location. So it's just a different suite number instead of using a virtual address because it just looks better. A lot of times banks know about those virtual addresses, even though the USPS says they don't. They can look it up online and kind of tell sometimes when they're a virtual address. So just be careful with those. Revenue, that's going to be really important. So a lot of times banks can overlook certain things when your business has revenue, your business has age. Most banks want to see that your business has been around for at least 2 years. Once your business has been around for over 4 years, you become less risky because most businesses are usually going to close or go out of business within the first 2 years. Your credit profile, that has a lot to do with it on the personal side and the business side, the entity structure, and of course, funding is not a one size fits all type of deal. There's so many different options out there. We really have to kind of figure out what's going to be best for you or your client in, these type of examples. So let's talk about if you plan on getting 150 to 200K in funding, you're probably going to need to go through a few different sets of funding framework in 90 to 120-day timeline because a lot of businesses starting out, they don't have documents. If you do have documents, then you're in a better position. But a lot of business owners, they don't want to provide documents, or if they do want to provide documents, it's going to be very little. So we're going to talk about the different types of banks out there, whether it's in-house or third-party underwriting. So this is really important to understand because a lot of those small banks that people talk about, a lot of them are underwritten by the same place, and you can't apply with all those places because they use the same underwriting, right? So most of the big boy banks, those are going to be what are considered in-house, right? So Chase is in-house. Chase recently opened up the funding gates for a lot of business owners. So they're not requiring documents. They're giving out great credit cards. You can get up to 2 business credit cards. You can get a business line of credit with them. They have really opened up the gates for small business owners. There's Bank of America, PNC, Citizens, American Express, Discover, which is now owned by Capital One. So Capital One and Discover are pretty much going to be the same because this all just happened. There's US Bank, Citibank, Goldman Sachs, Wells Fargo. Goldman Sachs, they do the underwriting for the Apple credit card and also the GM Financial credit card. So that's a pretty good credit card. And in fact, I have the Apple card. I've had it for a while, and they are constantly giving me credit limit increases. I just got a notification this week that I got a credit limit increase by just literally just spending and paying, spending and paying. I make weekly payments, and they are usually raising my credit limits between every 3 to 6 months. So it's a great way to kind of build your limits over time, especially if you plan to pay it back pretty quickly. So let's talk about the third party underwriting companies. And this is primarily Elon Financial. So if you guys have heard of Elon Financial, great. If not, we're going to be covering Elon Financial and who they are. And just be aware that Elon Financial, you can't go to Elon Financial and say, "Hey, Elon, I want a credit card," right? That's not what they do. Kind of like Ally, right? You can't go to Ally Financial and say, "Hey, Ally, I want to apply for a business auto loan." What you have to do is you have to find someone that's offering that, which in Elon's case, they do it for over 1,300 financial institutions, and they outsource their credit card underwriting. So a lot of banks are using Elon Financial. And then there's Total Card Management, TCM. And there's Independent Community Bankers of America. So those are the three major ones that you're going to see. Elon Financial is going to be probably the most popular one that we're going to see. And the important thing to understand with Elon Financial is Elon used to be great like 4 or 5 years ago. People were getting amazing credit cards with Elon. It was great, right? But now, things have really changed. It's 2024. Banks have tightened up their lending. You cannot really apply for more than 2 Elon Financial credit cards. So it's really important for you to understand that when you are going to these, smaller credit unions or, different banks that you're not sure of, understand, look at the credit application to make sure that it's not underwritten by Elon, because they work with a lot of smaller banks, a lot of credit unions, and they basically process their credit card applications and their credit cards. So they allow these banks to provide a credit card. So you cannot have, like I said, more than 2. So I'm going to be showing you guys where to look for when you go to these credit card applications, because for example, West Banco, you can see right here, Elon Financial, okay? That's going to be a pattern when you go to some of these smaller banks. Fidelity, this is probably the most popular Elon Financial credit card, and probably one of the better ones in my opinion. This is not on the business side, of course, this is on the personal, but just so you guys can see here, clearly it says on the application, Elon Financial. So that's what we're looking for when we go to these business credit cards. This is North Shore Bank business credit card. You can see here, Elon Financial. Okay. So you want to look for Elon, because you don't want to go after more than 2 Elon banks. These are 33 Elon banks that I could pull up off, the top of my hand. But like I said, they are, probably now over 1,500 banks that they do underwriting for. These are 62 different banks and credit unions that have credit cards issued by Elon that are known to offer the 18-month 0% APR, which is a good offer if you are looking to kind of transfer some debt around. If you, have at least $10,000 in credit card debt and you're paying interest on that, you can go and try to get a 0% interest credit card, do a balance transfer, and really pay down that balance pretty quickly over the next 18 months. Just make a budget, stick to it, and get that debt paid down. And these are some of the great banks to do it with. One of the better banks that I would recommend from this list is going to be Alliance Credit Union. Mechanics is also pretty good. So there's a lot of different options here. First American, that's another one. Citizens Business Bank. So there's a lot of options here. South State, that's another one. So I'll let you guys kind of go over this, and of course, I'll provide the slides, in the school app by Sunday. Credit card stacking is really popular on the business side, and this is how most funding companies provide or get funding for their clients, usually on the first or second round, because they don't have to provide documents. Most credit cards are going to go based off a stated income or projected income, and even going to ask you what you plan to spend every month on the credit card application. So we're going to be going over what those applications look like and what some of the data points you need to be aware of there a little bit later on. So basically, credit card stacking is a process where we can say, okay, we're gonna apply for 4 different credit cards that pull from Experian today. And then tomorrow we're going to pull from, or we're going to apply for, 4 different places that pull from TransUnion. And then the next day or same day we'll apply for 4 different places that pull from Experian. So overall, you've got 12 different potential credit cards that you could get approved for. The likelihood of someone getting approved for all of them, very unlikely, but usually it's about a 30 to 50% approval rate. So that's why you want to make sure to do it as quick as possible, have it planned out like, hey, out of all the banks that pull, Experian, I'm going to apply for Chase. And I know I'm going to apply for Chase first because they're giving out the best credit cards, sensitive to inquiries. And number 3, they have the 524 rule. So if you've opened up 5 new credit cards in the last 24 months, or you show that on your personal credit report, you're not going to get approved. So you want to understand too, if you've opened up too many new credit cards in the last 2 years, you might not even want to go to Chase at this point. You're just going to want to wait it out because you're not going to qualify for anything. Credit card stacking errors, common, that happen all the time. I don't know. I get off the phone with people and explain how to fill it out, and then they come back and they tell me what they put. I'm like, no, no, no. Remember, we talked about that. So you want to make sure that you fill out the credit application correct. And we're going to go over what to put in the credit card application, right? You also don't want to apply for credit cards when you have a weak or thin personal credit profile, because credit cards are primarily going to pull from your personal credit. If you have built up business credit, great, that helps. But credit cards are primarily based on your personal credit. So if you don't even have a personal credit card in your personal name that has been established for 12 to 24 months, don't even worry about applying for business credit cards right now. You need to focus on getting at least 6 credit cards on your personal credit and then growing those credit lines over 12 to 24 months to show your payment and to hopefully increase your credit limits, because you not being able to show that is not going to help when you apply for business credit. Adding authorized user trade lines is not going to help when applying for business credit. Okay. Applying for a business that's not set up or structured correctly. So some things you can get away with, like you can get away with using a home address on a business credit card application, as long as that home address is consistent and listed on the Secretary of State and so on. So they have to be able to verify you. And sometimes they'll ask you to update or upload your letter from the IRS showing your EIN number just to verify your business. Going to banks and credit unions that don't service your line of work, talked about this previously, but for example, I went to Navy Federal and tried to open up a business bank account. They went to my website, saw the word credit, and immediately were like, oh no, we don't work with credit people. And I'm like, well, I'm not. And they're like, oh, well, you have the word credit on your website. So nope, no go. So yeah, that basically killed it for me with Navy Federal. They're one of those banks that absolutely do not work with anyone in the credit space. Like they don't want anybody, not even the word credit on your website. So just so you guys know. Also, applying for too many credit cards too quickly. So again, you want to do this very strategically. Make sure that when you first start out, you only have maybe 1 or 2 inquiries, and they cannot be within the last at least 6 to 12 months, just to be on the safe side. I recommend 12 months because you don't want to show that you've been applying for too much new credit lately. Also, not submitting the applications in the right order because, like I said, with Chase and some of these other banks, they are what's called inquiry sensitive. So if you have 2 other inquiries from banks and they're like, oh, they're applying with all these different places, nope, it's going to be a no-go with us. They're too risky. Mismatching information on multiple applications. So this happens a lot for people. They will, start their business with one address and I don't know what happens, but it changes. And then they don't update the address with the Secretary of State. And all of a sudden they have mismatching information all over the place. We have to make sure that our address is 100% accurate all the way across the board. The Secretary of State, the IRS, Google, everywhere that has the same exact address for you. Very, very important. If anything has changed, you need to update it accordingly with anyone who has the old information on file. So this is kind of the funding framework in sequence breakdown. So basically, we're going to start with round 1. And I like to wait at least 6 months because you don't want to look like you need the funding too quickly. When people get funding too quickly, they usually crash and burn quickly. So we want to take our time, we want to do it right, and we want to make sure that we're showing that we're not, abusing credit, right? So you apply for the first round, you wait at least 6 months, longer the better, and then you apply for the second round. First round and second round are usually going to be up to about a $50,000 range. It depends on what your highest credit limit is on your personal side and also what your projected income is on the application. And really, what it boils down to is the data points that are on that app and your personal credit. The reasons why we don't want to do it too quickly, too fast in the beginning, of course, is because we will get flagged. A lot of these banks share data. We don't want to get flagged as credit seeking. We want to allow some time to grow our credit to show that we can pay on time. We don't want to have too many inquiries too quickly. And of course, we don't want to have too many new accounts opened recently. Now, this won't necessarily be a problem if you already have an established personal credit profile because you wouldn't have opened any personal credit cards recently. So once your personal credit is established and you haven't opened anything recently, it's a great time to apply for business credit because you can get those inquiries taken off and those business credit cards are not going to report on your personal credit. So it's really good for people that already have a well-established personal credit profile. And again, you don't really need more than like 10 personal credit cards. Once you have more than 10, it's like you're just kind of overdoing it. And that's what I did. Unfortunately, I got too many credit cards too quickly. So honestly, you really just don't need more than 10. Once you get to 10, just grow those limits and focus on getting the business credit cards. So let's talk about the 50K to 250K funding frameworks because whenever you're talking about credit cards, generally credit cards do not go over $50,000. Generally, anything that does not require documents can go up to 50K. Anything over 50K is usually going to require some sort of documents. Now, Chase has been giving out bigger things, bigger limits without documents, and some places will. But I'm just saying, generally speaking, for whatever reason, Chase is just being extremely friendly to newer businesses these days. So, hey, I love it. So this is the funding framework that I would go to, of course, once you already have at least, a 720 credit profile, at least a 720 FICO credit score, and a strong personal credit profile. You want to go after the Chase credit cards. Now, there's two Chase credit cards, and both of them right now have a $750 cashback rewards, and there's 0% interest for at least 18 months right now, I think. So 12 months is not accurate. They're at least 18 months right now. Once you get approved for the first one, then you can apply for the second one using the same inquiry. That's why it's important to go into a branch and work with a relationship manager inside of the branch so they can help you get these two business credit cards. I'm going to go to the Chase website right now and show you which ones they are because they're so amazing. And with Chase, you can expect no more than two credit cards. So that's why I say don't waste those two credit cards on the personal side if you plan to get business credit cards with them, because really the business credit cards are where it's at. This is the Inc. Unlimited card right here. You can see it's got the $750 cashback bonus. Oh, it is 12 months. So I was right. So 0% interest for 12 months. And then they have the Inc. Business Cash Card, which also has a $750 bonus, 0% interest for 12 months. And there's some other bonuses here as well. So these are the best credit cards out right now. I mean, you can earn $1,500 by opening two business credit cards and just following the spending, which this one is like spending $6,000 on purchases in the first 3 months. This one is $6,000 after 6 months. So pretty good offers. I actually just got one of those offers. I think mine is the business. I think it's this business unlimited one. But I got one of these cards and I messed up because I got my personal card. And then when I went after my second one, I was declined. So I'm probably going to have to wait a while to get the second business credit card because you could potentially get 3 credit cards with Chase, but it takes a while with them. They're not going to just give you 3 off the bat. You can more likely get 2 business credit cards off the bat, but that's the route that I would go. And then US Bank, they have the business platinum card that goes up to $50,000. And these are all stated income. This is no tax returns, no nothing. This is all stated income. Citizens Bank, they have the business platinum card, the FNBO Evergreen Business Edition, and you can get one card from FNBO. So they're still a pretty good bank to go from. So this is where I would go. And these are all going to be primarily from Experian, Chase's Experian. They could also be TransUnion, but generally they're just Experian. US Bank, they could be Experian and TransUnion. So just be careful. Citizens, they can vary, but I just had someone get pulled from Equifax from them. So that was interesting. And then FNBO, I'm not 100%, but I believe they're still using Experian. But if anyone has any other data points they can share with them, let me know. So here is the strategy that funding companies use and charge people a 10% to 15% success fee. Last year I had a consultation with a guy from a funding company, and he was like, "Oh yeah, we can give you a really great deal to give you funding." And I was like, "Oh, well, what's that great deal?" And he's like, "Well, normally we charge 20%, but we can give you 15%." I was like, "Oh, that's a deal? Like what?" So basically, what that means is everything that they get approved, they would take 15% or charge the credit card 15% of the available credit limit. So you're starting out in a tremendous amount of debt. Okay. And they usually get you 0% interest credit cards, but you still have to pay all of that back. And you're already in debt before you have even spent a dime or invested into your business, which works for some people, but I don't agree with it because it already puts people in a tremendous amount of debt and it's very risky. So what they do is they do like we talked about, they run all of the plays through the certain credit bureaus, like all the banks that are going to be pulling from Experian. A lot of these funding companies have built relationships directly with the banks. So they'll have someone that they work with at Chase, they'll have someone that they work with at US Bank, PNC. They'll build relationships so they can just send all their people over there. LinkedIn is a great way to find relationship managers that work in the banking industry because they're all on LinkedIn. Okay, so go to LinkedIn and find some. But basically, they just get the inquiries removed the next day and they just keep on applying. And they'll just call into the credit bureaus and say that there was unauthorized inquiries on the credit file for the client. The client doesn't even have to call in. But I would recommend if you are the client for you to call into the credit bureaus just in case they try to verify information with you, which sometimes they do. Now, using this strategy, you can technically get, anywhere between say 100 to 300,000 and 0% interest in your business name. And that's all with business credit cards primarily. Sometimes business lines of credit, but again, it depends on the business, how the business is set up, what kind of documents, because a lot of times business lines of credit could require some documents. A lot of times, credit cards are no docs. Business lines of credits can be no doc, but they also are getting stricter these days. So I'm seeing a lot of banks that are requesting small amount of documents, which we call low docs, which just means low documents, low amount of documents to get through the underwriting department. Now, they can accomplish this and give their success fee of 10%, and that would give this funding company about $30,000 in fees if they got someone $300,000. So that's a lot of money. $30,000 to get someone 300,000. That's a pretty good living. A lot of people do this, and this is how they make a lot of money in this industry. And, I would not bash anybody if they started a funding business. I would encourage you guys all to, because there's a lot of money in it. A lot of people just are not educated on how to get funding. They don't know the game and they would just feel comfortable dealing with someone that knows what they're doing. And that's what it really boils down to, because they're like, no, I would rather just pay it. I just want it done right, and that's fine. But this is what the funding companies do, right? Now, what most funding companies really focus on is that they ensure their clients have between $30,000 and $40,000 limits that are on their credit report, and that means that are in their client's name. Okay. And that can be a blend of things, but primarily we're looking for revolving lines of credit, since this is for revolving lines of credit on the business side. So again, comparable credit. The maximum amount of AUs that anyone would need would be 2. We don't want to oversaturate any credit reports with AUs because it is a red flag. Now, it's okay to add AU and kind of get that initial boost because they're not going to necessarily know what the credit score was prior to that. So that's okay. But we want to make sure that the client has an established credit profile before they even step to the banks, because if they're not quite there, they're not quite there. We just have to take some more time, right? No big deal. We cannot rush funding. There's a time and a place for it. Usually when people rush funding, they get into deals that they can't afford long term and it never ends well. Okay, I see it happen all the time. You also want to make sure that you have at least one primary personal credit limit that is revolving credit card over 10,000 on your personal credit. So again, try to build up your current credit limits on your personal side. And they want to see grade A bank trade lines. Okay. We don't want to see self lender. We don't want to see Chime. We don't want to see all these crappy credit builder accounts, Ava, rent reporters. No. Okay. If you are going to build credit, you have to build credit the right way. We have to go to the banks that are the best and that people recognize. Chase, US Bank, PNC, Truist. You can go to Navy Federal. Any credit union out there that is like the top 25, banks are going to recognize them. So go with the banks that everyone is familiar with because that's comparable credit. And they're like, oh, well, yeah, if they trust them and they showed their ability to repay them on time, they're not a risk. They're good. We'll approve them too. Here's a little bit more of a advanced framework. It's still the same banks, Chase, US Bank, Citizens Bank, FNBO. These are the banks that you want to start building a relationship with, open up a business bank account with, let it season. Even Truist. I'm not in Truist's area, but if you are in an area that has Truist Bank, start building a relationship by starting a bank account with them on the business side so you can start building that relationship. Now, with these banks, with Chase and US Bank, you do not need a bank account to apply for their credit cards. Citizens Bank, I would recommend it, but it's not required. FNBO, I would recommend it. They're kind of like a relationship type of bank. So you definitely want to have a relationship with them before you apply for anything. Now, here's an example of someone that got $95,000 in one day. Now, First Citizens Bank, that's another really good bank. And they are really good on the personal side and the business side. Now, this person went to PenFed, which is not on the business side, it's on the personal side. So they got 10K credit card on the personal side, which is great because PenFed is a really good bank. They pull from Equifax for their credit cards. And fun fact is Equifax is now pulling from, let me see where it was, because one of my clients applied for a personal loan with them. So they actually they use Equifax for their personal loans, but they use another another bureau. Let me see. They sent me a screenshot, so I'm gonna look it up. Equifax. So yeah, so they're actually using Experian for personal loans. They're pulling from Experian for personal loans, and they're pulling Equifax for their credit cards from PenFed. And again, PenFed is just on the personal side, but it is a good bank if you need some higher limit credit cards and you don't have many inquiries on your personal credit. They're a great bank, and you can get that from Equifax. And then First Citizens Bank. So this person had two businesses. With the first business, they got a $25,000 business credit card, and then they got a $10,000 business line of credit. And the second business, same thing. And they used their personal credit to guarantee it. So this was no documents. This was all stated income, but they went into a branch and they applied with a relationship manager. That's the most important part. And they did all of this and they only got two inquiries with First Citizens. So actually, First Citizens was one inquiry and PenFed was one inquiry. Because with First Citizens, the business relationship manager can do what's called double dipping. So they can get you approved using that same inquiry for multiple credit products with their bank. So that's why I really like First Citizens Bank. Don't get them confused with Citizens Bank. They're very different. So there's a lot of banks out there that have similar names, but just understand there's so many banks out there. So you always want to look at the logo and make sure that it's the same bank that you're thinking of. So there are what's called PG, which is personal guarantee. You're providing your personal credit to guarantee these business credit cards or business funding. And then there's non-PG hybrid funding, which kind of primarily is based on your income because they have to get something, whether it's credit, collateral, or cash, right? Cash flow. This allows you to kind of tap into both. Now, a lot of the hybrid funding is not the best, but it allows you to kind of build credit and it can get you into some doors. So here are some, kind of hybrid methods. Now, Chase, they can look past credit if you have good cash flow. A lot of these banks can. Same with US Bank, FNBO, Citizens. Bill.com is now Divvy, but they are going to connect via Plaid to your business bank account, and they can approve you based on your business revenue. Same thing with Capital on Tap. They are not going to use your personal credit, but they can approve you based on your business revenue. Now, anytime you get a non-PG credit card, expect it to be a charge card, meaning it is a net 30. You're going to have to pay the full balance within 30 days. So that's why I say they're not the best. But if you are looking to build credit, you got to start somewhere sometimes, right? So they're a good way to get yourself in the door a lot of the times. Bluevine, that's another one that offers a fintech business line of credit. Bluevine was very popular during the PPP days because they were actually getting a lot of people approved for PPP loans, and they give out up to $250,000 business line of credit, but your business must be around for at least 2 years. And understand when you go to a lot of these places like Bluevine, a lot of them are going to want to connect to your bank account. Back in the day, we used to be able to submit bank statements manually, and now they want to connect to your bank account via Plaid. So if you don't have at least $10,000 in cash flow in your business, a lot of times it's going to be a no-go for a lot of these places that are, revenue reliant. So just be mindful of that. We don't want to be applying for things that maybe just don't qualify for our business at this time. I'm going to be talking about some no doc and low doc business funding options. US Bank. I really like US Bank. And just so you guys know, they have a really good credit cards. They have really good credit cards. And they also have a no doc to low doc business term loan. And they have a lot of other things. They are SBA lender. So I really like US Bank, but you want to make sure that you have some sort of relationship with them. If you have a relationship on the personal side, that's fine because it's still going to be attached to your social security number on the business card credit application. Even though you use your EIN, you're still going to put on your social security number. So it's going to be attached to you. And they are going to usually pull from TransUnion. This is one of those banks that even as a newer business, you can get approved for a business credit card with them. You want to just make sure that your business is listed online. This is one of the banks that is going to verify you. And if they're not able to verify you, they're going to ask for documents. You don't want them to ask for documents. You just want them to be able to verify you and get you approved. Okay, that's the most important thing with US is you got to make sure you're on Google, you're listed online, and you're pretty much good to go. I would highly recommend that you build a relationship, and this goes for pretty much all the banks, right? If you have a bank branch near you, walk into the branch and find out who the relationship manager is and start building a relationship with them. And then you can say, hey, I have a lot of, friends and family and associates that always need funding, and can I send them your way and, build a relationship with them that way as well. They're typically going to be pulling from TransUnion for their business credit cards. And it helps if you have a business bank account with them that you have at least $3,000 with. Just kind of let it sit and marinate in there. Okay. Yes, good thing. Stay under 20,000 for no doc with US Bank. Yep, they could ask for documents. Any bank could, right? If you put some outlandish stuff on your application, it's a high likelihood that you're going to get flagged for some sort of documents. So that's why we want to make sure that, your income is, somewhat relevant. You can use projected if they're asking for projected, if they're asking for household, just understand what they're asking for. Don't make it too much, but again, don't overdo it, especially like with American Express too. They can ask for documents a lot of times. I just had a client that applied for their business line of credit and they asked for documents. So not unheard of. UMB, that's another bank that has a pretty good no document credit card request up to $25,000. New businesses are okay. They typically pull from Experian and no account seasoning is required. City National Bank. This bank likes businesses that have been around for at least 2 years. Okay. If you are going to City National Bank and you have been in business for under 2 years, I would just open up my business bank account and I would let it marinate until your business has been established for a minimum of 2 years because they are very strict about that. Okay. They have business lines of credit, they have low document programs. You can generally get up to $100,000 with them. But again, you want to build a relationship with the relationship manager so that way they can help you submit all of your applications for you. They do have a business line of credit that's up to $250,000, but you will need 1 to 2 years of tax returns. Generally, they're going to be pulling from Experian and you want to apply in the branch. And on the business side, City National actually still looks at Dun and Bradstreet. So they're a little bit old school in that regard. So just beware of that. M&T Bank. This is one of those regional banks, and it's best to do everything in branch with regional banks like M&T. If you do have an M&T near you, build a relationship with them. Great bank. They have loans anywhere from 10K to 100K. They have business lines of credit anywhere from 5,000 to 950,000. Bit of a stretch without documents going that high, but like I said, generally you can get no to low document request up to about 25,000 with M&T. Again, business age needs to be at least 2 years. Generally, they're going to be pulling from Experian. Truist, one of my personal favorites, and many of my clients have actually been able to go to Truist and get business credit cards, business lines of credit. You can get up to $100,000 for small business loans and lines of credit from Truist. And Truist is actually a merger of BB&T and SunTrust Bank. So that's why they're really rebranding and giving out a lot of funding is because they reinvented themselves. So they want to bring in a lot of business. If your business is under 2 years, it is okay, but you will need at least 2 years for the business line of credit. BLOC is a business line of credit. Under 2 years, that's okay for the credit cards, but not the business line of credit. Generally, they're going to pull from Equifax. So this is a great Equifax. And on the business side, they pull from Equifax on the personal side and Equifax on the business side. And the great thing about Truist is you can use multiple entities and you can go with two businesses and apply for funding. But again, apply in the branch with a relationship manager because they're going to help you put through your application. Citizens, again, different Citizens, different logo, right? Business lines of credit, you can get anywhere up to 250,000. Again, anything over 50K is going to ask you for docs. Business credit card and business line of credit have been known to be no to low document for loan requests that are up to $50,000. And that's pretty much the general thing that you're going to see across the board, especially these days. And like I said, banks are tightening up. So that number is rapidly decreasing as we speak. So you're going to need to show something to them if you want to get a bigger bag. And that's why a lot of these people that show bigger approvals to you guys on like social media, you have to understand their income might be very different than someone else's that's applying. So that's why they got approved for a much larger amount. Business age, at least 6 months in business. So they will do business with newer businesses, which is nice. And generally, they're going to pull from either Equifax or from Experian. It could be either or. Some of these banks vary based on where you are located. So some of them can be territory based and they try to just switch it up to be tricky, right? And then you also can finish the business line of credit with a banker in branch. Always go in branch. It's much, much better. Like if you have really good credit, you can totally apply online, no problem. But if you are applying for yourself, you definitely want to go in branch. Fifth Third, they have business line of credit up to 100,000. Anything over needs to be secured somehow. Okay. Business age, at least 1 year in business. Typically, they're going to pull from Experian Personal and Experian Business. And you're going to want to set up an appointment with a relationship manager to apply. Anytime you see the word or the RM, that means relationship manager. Every bank has one. Their job is to bring business into the bank and they get incentivized for that. That is their job. So that's why it's important to build relationships with those people because they know who's getting approved. They know what data to put on the application. You might go in there and say, oh, this data, this data. They might look at you side-eyed and say, hey, that sounds good. Why don't we do this? Right? They are going to help you make sure you get approved because they know who is getting approved for what. And their job is to bring business into the bank. With Fifth Third, it is help to season your bank account before you apply for any credit products with them. So be mindful of that. KeyBank. KeyBank is another very popular bank for small business owners, and they are known to have low to no doc programs up to 50,000 and business credit cards up to 25,000. New businesses are okay. Generally, they are going to pull you from Equifax. It could be a soft pull initially, but I've also seen people where they have had a hard pull. So it could be either or. But you want to submit your application through a business banker in branch, especially with Key. Fulton. Fulton Bank is great. They can give you up to a business line of credit up to $50,000, but they will want to see at least 1 year's worth of tax returns if you're not an established client with them or you don't have an established relationship with them, aka a bank account, right? If you are established with them, at least you will want to have 3 months of bank statements and your business will need to be in good standing with the Secretary of State. They like to see that your business has been around for at least 2 years. Generally, they're going to pull from TransUnion. But guess what? Their business credit card is underwritten by Elon Financial. So that means if you do plan to go to Fulton, beware that you're not going to have many other options with Elon, maybe one other bank, but that's it. TD Bank, I love TD Bank, and they are great. Their personal credit card with Elon is really good, but they also have business loans and lines of credit anywhere from 10,000 to 1 million. For the loan to be no to low doc, it needs to be below $25,000. Business age needs to be at least 1 year. Business Bureau, typically they're going to pull from Equifax. I've also seen it from Experian as well, because a lot of these banks can kind of change up. They have been requiring an account to be open before you apply. That's kind of good practice for most of these banks is build a banking relationship with them if you plan to get credit products with them, right? Some banks it's okay, but with most of these banks, especially the credit unions and the community banks, usually a relationship is going to be required to apply for their credit products. Bank of America, they have up to $50,000 business credit cards, up to $25,000 no doc apps on the business line of credit. They also have a good auto loan program. We talked about that. You can get up to 4 auto loans with Bank of America for your corporation or LLC. But on the flip side, a Bank of America is a little bit more strict. They want to see that your business has been around for at least 2 years. Okay. You could get approved for the business credit card or business auto loan if your business has been around for under 2 years and you have an established relationship with them and you have good cash flow in your bank accounts with them. But if you are going after the business line of credit, you need at least 2 years in business. Same with like the equipment loans and more of like the cash transaction type of loans. So they are pulling from TransUnion on the business side. On the personal side, they pull from Experian. I have seen them pull from Experian and TransUnion on the business side because a lot of times they can do that as well based on location. Um, with Bank of America, we kind of talked about some helpful tips with them. Bank of America is one of those banks that is like kind of strict. They want at least a 700 credit score, especially if you don't have an established relationship with them. They want to see at least a 700 credit score. So if you don't have good credit, I would not recommend going to Bank of America. If you are looking for a secured business credit card, Bank of America does have a secured business credit card that they offer. However, it's kind of shaky on who it actually reports to. Bank of America's with SBFE, but a lot of people have said that they didn't see it anywhere else. So that's something that has still needs to be verified. So if someone does have any information on the Bank of America secured business card, that if it's actually reporting to Experian these days, please share because I have not been able to verify that. But it is a good credit card just to have to start building a relationship with them as a newer business that's looking to establish a relationship. PNC, they are very friendly to small business owners and they have some pretty good small business lines of credit and loan offers that range anywhere from 20,000 all the way up to 100,000. You can generally request up to $25,000 with no docs, and you can apply online for the business line of credit. They are looking for your business to be at least a year to 2. Most banks are 2 years. PNC, they can overlook some things if you have, a year of business, but your income is high and your credit is good, then they would probably be okay with that. Generally, they're going to be pulling from Experian, and they have really good 0% business credit cards, perfect for balance transfers. So if you have a high balance on one of your personal credit cards and you're looking to get a 0% business credit card to balance transfer that debt to get it off your personal credit and kind of clean things up a bit, this is a great option for you kind of to look into. Commerce Bank, this is the small business line of credit and loan offers anywhere from 20K to 100K. You can request 25K no doc and apps only the business line of credit. Now, if you are going to be applying for a business line of credit, you want to go into a branch and do that, okay? They are going to require that your business age be at least 1 year old, and they are going to typically pull credit from TransUnion and Equifax on the personal side. I have not found that they pull credit on the business side. Some banks do not pull credit on the business side. They just pull credit on the personal side. Some banks pull both. So, and things are always changing with this day and age. It wouldn't surprise me if banks started tightening up and pulling personal and business credit on the business side. It really wouldn't. I actually partnered with a funding company that offers personal and business funding. And if you want to apply, you can certainly see what you qualify for. They have a lot of great options and can kind of give you an idea without any hard pulls to your credit what you would qualify for. There's a lot of funding alternatives, and this is generally where people can get kind of unique funding, but it needs to work for you. Okay, I've seen a lot of people take on funding where they have a daily repayment and it doesn't work long term for them, and they end up getting late payments and going south with the whole deal, and it kind of messes up everything. So we want to make sure that it makes sense, because I was just speaking to a lady that I work with, and she helped one of her clients acquire funding, and she did what was called a merchant cash advance. And basically, the company is going to be taking a $250 payment from him every single day to repay back the payment. And I think overall, it wasn't much funding that she ended up getting for him, maybe less than 50,000, and it was going to cost him, over $5,000. I don't remember the exact figure, but it was ridiculous. So it wasn't a good deal. For him, he was just looking to build a relationship, but for the amount of money that he is going to spend on that whole ordeal, he could have went to a much better bank to build a relationship with versus a merchant cash advance company, because merchant cash advance companies scream paycheck advance company. Okay, they're kind of like that. They're not the best way to get funding on the personal side or the business side. All right, so let's talk about merchant cash advance. So basically, you're going to get a lot of people that say, "Oh, I can get you funding," and then they're talking about a merchant cash advance. I fell for it when I first started. I paid an application fee of like $200, and it ended up being a merchant cash advance, which is basically getting funding that you repay using a percentage of your sales, and usually it's daily sales, so they're going to want a daily payment, plus you're going to have to pay a small fee. It's not ideal for longevity, and honestly, it's a very high interest rate, so it's not the best funding. But if you have cash flow and you have lower personal credit, this can be a funding option. But again, you're going to be paying a portion of your future profits directly to them. So they're going to be taking that money probably on a daily basis. So you just have to make sure that your business is cash flowing and it makes sense. So generally, if you get a $15,000 merchant cash advance loan, the loan fee is going to be about $1,500, and then 9% of sales towards the repayment. So it can be very expensive, very, very expensive to take out a cash advance, like $25,000 loan, $2,500 loan fee, 15% of sales towards the repayment. So every day, 15% of your sales are going to go towards paying this loan back. Okay. And these are just examples. In this day and age, their fees, there's no cap on them. So you have to really watch it, because a lot of times their fees are very high, and you want to make sure that the repayment plan is going to work well for you, because you don't want to go south with these things. There's also called invoice factoring, and this is really popular for like manufacturing companies. But if you are selling and you have invoices that are outstanding because you send your clients an invoice, and you have net 30 terms, but sometimes they don't pay for 6 months. Like, for example, I used to work for a manufacturing company doing their books, and I would invoice Intel, the big Intel company that we all know. They would take a minimum of like 6 months to pay their invoices. They were so slow to pay their invoices. So if that company were to have, $1 million in invoices that are due to them, and they needed money right then and there, they can do what's called invoice factoring, where they sell their outstanding invoices to a third party in exchange for a cash upfront fee or I'm sorry, a cash upfront in advance. So basically, you're just taking a loan on your future invoices that are due to you, essentially. And again, not the best terms, not the best, but if you are in that situation and you need money and it's dire, then it would work for some companies. So this is kind of how it works. I kind of just broke it down to you. I'll let you guys review this on the slides a little bit later on, but that's the best way. Some of these funding options can be used for e-commerce. Trucking is another really popular one because a lot of times there'll be a lot of invoicing out there from brokering and all these different fees and things like that. Equipment financing, real estate, investing, business services, contractors, a lot of contractors out there, they're waiting to get paid from people and it can take months and months to get paid. So this is really popular for like contractors, plumbing companies, electric companies, construction, IT, medical, you name it. Any company out there that has outstanding invoices that are due to them that can be collected on, they can sell those for, an exchange of an upfront fee. There is also LensPark. So LensPark is one of those companies that works with businesses to provide equipment financing, working capital, bridge financing, which is a bridge. Sounds like, short bridge, right? Meaning short term, not the best, not the best. It's meant for short term. Real estate and a number of other things. But with most of these companies, you have to show cash flow in your business. So with LensSpark, they offer business lines of credit up to 150,000, but they want to see that you've been in business for at least 6 months. You have at least $15,000 in monthly revenue. They're going to want to see bank statements. And again, most of these companies that are going to be like your online type of companies, they're going to usually just connect to your bank account using Plaid technology and figure out what your monthly bank statements are. So they're not even going to need you to upload those. They can just connect automatically. If you have bad credit or lower credit with them, that's okay because again, some things can be overlooked if you don't have the perfect credit score on the personal side, like cash flow, because again, they are looking for at least 15,000 or more in monthly revenue. Okay. You have to have a business bank account. I spoke with a gentleman recently and he was like, I was like, okay, you make $10,000 a month or more. That's great. But he did not have a business bank account. We have to have all of our business transactions, especially deposits, go into a business bank account. So that way we can get funding. It's also a good idea that if you are self-employed, you put yourself on payroll so that way you can get pay stubs for yourself so you can qualify for funding if pay stubs are going to be required. Now with Lensmark, there's no more than 5. You can't have more than 5 insufficient funds days in any month. So if you went insufficient on your bank, that's not a good sign to them. They want to see consistency. So it's good to, pre-plan with your banking when you're applying for funding, if possible, because you want to show a larger daily balance with banking, especially if you're planning on going after funding. Like if you are planning funding, you need to be strategic about it, meaning 3 months up to, you need to plan to spend less money and have more funds sit in your account to show that you have cash flow and your daily balance is larger. I had a gentleman, he had really good cash flow, but he was as fast as it was going in, it was going out. And that's not a good sign. His daily account balance was still low because he didn't allow the funds to sit in there long enough. So that's not a good sign to the banks. We need to show a higher daily balance, especially for that 3 month time leading up to it, if possible, right? Sometimes we don't have a choice and we have to get funding, but it's best to plan ahead of time so we can be more strategic about it and optimize our funding a lot more. Especially you can work on getting your personal credit a little bit better optimized, because they're going to look at your personal credit. That we all know that it's probably not going to be a hard pull, but it's definitely going to be a soft pull, and the higher the better. Caputus, I can never say their stupid name, but they have business term loans, and you just need to be in business for at least 2 years. You can have at least a 625 personal credit score, but they want $250,000 or more in annual revenue from your business. You have to be a business that operates in the US for profit. And they also offer equipment financing. So if you've been in business for over 3 years, then you can qualify with a 675 FICO credit score, but they do want to see that you are making at least $150,000 in revenue with your business. So a lot of these places, again, it's going to be revenue based. So if you don't have a business that is revenuing, these are not going to be good options for you. If you don't have a business that is providing revenue quite yet, your best bet is to credit card and business lines of credit that you can personal guarantee. This is their website, and you can see here they offer, invoice factoring, SBA loans, lines of credit, equipment financing, pretty much any type of financing that you can possibly get. But again, it's going to require documents, and it's going to require revenue, and they're going to want to connect to your bank account and verify your deposits. So you must have a minimum FICO score of 600. In today's world, that's probably going to be a little bit higher because things are changing. And you can have, there's different things that can get you approved, right? Revenue can always help overlook FICO scores. So just be aware, if your business has good revenue, there's still opportunity out there for you. But you can't have no revenue and no credit. It's just not a good look, right? It's very limited. We also have Amex, which was formerly Kabbage. This used to be Kabbage used to offer the business line of credit. So if you are going after the Amex business line of credit, just understand that these are some of the things that they are going to be asking for right here. So they are asking for an estimated annual gross revenue for your business. So those are some basic eligibility things. Now, if you put your um, income to be too high with them, they are going to ask for tax returns. So with them, they're saying you have to be at least 18 years old. You have to have started your business at least 1 year ago, have a FICO score of at least 660 at the time of application. American Express, they pull from Experian. Have a recent average monthly revenue of at least $3,000. Okay. So that's not much. They're not asking for much. That's why I like American Express, because they are willing to take a chance on new business. They just want you to be honest and forthcoming. But again, it's saying an estimated annual gross revenue for the business. So that can be a little bit higher. You don't want to put over 200,000. You want to kind of stay under 180. Fundbox. This is another one that has pretty good business lines of credit if you are cash flowing. Okay. They were another one that was really popular during that PPP era. And this is what their website looks like. Now, with Fundbox, they can give you a business line of credit or a business term loan for up to 150,000, but you're going to need your EIN, business checking account, $100,000 in annual revenue or more, 600 or more personal credit score. That's soft, a credit pull. Based in the US, at least 6 month in business, does not report to personal or business credit. So there are a lot of these type of deals don't report, which is okay, but just don't mess up because they're going to try to come after you. And then you can draw against it. Once you draw against your business line of credit, they're going to conduct a hard credit pull on you. So that could change things if your credit has drastically changed. Cardiff, they're another one that, hey, they will give to people that have good cash flow. Okay. So if you have been in business for at least 6 months, have 10K in monthly revenue, have a business bank account, they're saying, hey, if you're making at least 10K a month, you can have bad credit and we'll give you capital, because they want to give out money because that's how they make money. They will do equipment financing. You just have to have a quote from the vendor to purchase the equipment. This is kind of what they specialize in, is equipment financing. So if you're purchasing, any sort of business equipment, you want to get a quote from the provider, the equipment provider, and then take it to this place, because that's what they're going to require. And they're saying, even if you're a new business, we're okay with that. New Tech. This is another one that it's pretty good company, but like most of these places, revenue based. So they're saying hey, we'll give you a business term loan anywhere from 10,000 to 10 million, but we want you to be a US based business, a business that operates for profit, an existing business with 2 to 3 years worth of tax returns. Okay. We want a business with a repayment ability from earnings. So they want to see at least $10,000 a month in revenue. And if you don't have it, you're not going to qualify. But if you have at least that, and you have ability to make more with what they would fund you with, you can write a proposition for them to explain how you plan to allocate the funds and make more money. They're going to want to see business bank statement, any sort of business permits that you might have for your business. The credit score, with them, I would say you probably want at least a 680, right? I would say that's going to be standard with any place, but some places will definitely approve you at a little bit lower. But I mean, in this day and age that we're in, it's not worth applying for anywhere if you have below a 680 credit score. Let's just be honest, right? You just need to work on your personal credit, right? Don't worry about the business side quite yet. You're probably not there yet. Profit and loss statement. If you have a good profit and loss statement, they'll consider that as well. Bluevine, this is another one that was really popular during the PPP time. They have a lot of business options. This is what their website looks like, and they can give you up to a $250,000 business line of credit, but they're asking that you make at least $175,000 annual revenue, or at least $10,000 a month in monthly revenue. They will approve someone with a 625 personal credit score. They want more than 6 months in business. If you've been in business for over a year, that's even better. Over 2 years, that's even better, right? Anything over 2 years is always going to be better. But just so you know, even as a new business, you have opportunity out there. There's a lot of places that'll still fund you as a brand new business, but they want to see that you are making revenue. And sometimes that can be hard as a brand new business, but some people do it. A lot of people do. They take off, they do really well. So they also want to see that you're incorporated in an eligible US state and that your business is in good standing. Smart Biz. This is another one that offers a lot of SBA financing, and they offer business term loans. You want to make sure that you have a personal credit score of at least 680. I would say at the time I did this, I probably wrote 650, but really it's 680. US based business. you are going to need business tax returns for this company. Some companies you can get away with having 1 year, maybe 2 years, right? But even as a new business, you still want to file your taxes. So you want to get with a licensed CPA in the state that your business is registered to file your business tax returns. So that way, when the banks are asking for them, even if it's not, great numbers, it's okay because you're like, look, I'm growing. I'm a new business. I'm getting this funding for this so I can make this and blah, 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 blah. Because a lot of times they're asking for projected numbers when they ask you for your income anyway. So that's why it's really important when you're filling out the application to read and take your time and make sure you understand what they are asking you for. Okay. Sometimes you got to take a minute and just read it a few times and understand it. But they are the number one online facilitator for the SBA, Smart Biz. And I showed you guys them in last week. They're like one of the top companies that offer SBA funding and bank term loans for under $350,000. You cannot have any bankruptcies or foreclosures on your personal credit in the last 3 years if you want to go to Smart Biz. That's another data point that's really important. But here are some ways to expand your funding and your geo reach. And basically, what that means is, banks that are geo restricted, meaning you have to live in that area to be able to bank with them. You can add what are called credit partners to your business. And typically, in order for someone to be a credit partner, they'll need to own at least 20% or more, or have 20% in shares of the business in order for them to sign on as a credit partner. So if you're like, hey, my business partner lives by Truist and they're going to be signing on behalf of the business, then you can go to Truist. So that would qualify you guys. So, and this can be a temporary thing or it can be a permanent thing at your election that you have for your corporation or your LLC. It just kind of depends, right? And a credit partner might already have a relationship with a bank. Funny enough, someone reached out to me just recently, was like, "Hey, do you have any credit partners?" And I'm like, no, not that I'm aware of. But sometimes it's good to network with people because there's good opportunities out there. But of course, it just has to make sense for everybody. One thing that is a hot topic, a lot of people are talking about shelf and aged corporations. Okay. What does that mean? An aged corporation is simply just a corporation that has been put on a shelf to age. It's simply that. It's just an aged business because we all know that generally businesses that are at least 2 years old have more funding opportunity than a business that's 6 months old, right? But is it really worth it for you to purchase a shelf corporation or an aged corporation, which they're the same thing essentially, right? Now, an aged corporation is a company that shows no current activity. It's been put on the shelf to age, right? The company can be sold to a person or a group who wants to start a company without going through all the procedures of creating a new one. So, for example, if I were looking for a shelf corporation, I would go on to like sunbiz dot whatever it is on the Florida SOS. And I would look for corporations that were at least, 5 years old, that didn't have a lot of history and may seem to like there's no activity, right? And you can find out who the owners are very easily and you can contact them. That's how a lot of people do it. Or you can simply start your own. That's what I recommend because then you have the ability to make sure everything is set up correctly. You're not using any weird names. You don't have to use somebody else's name as your business. You can use everything that you start with, right? And you can use Busy. This is my account with them, and I actually have 4 in this account, and then I actually have a couple different Busy accounts, but I have 4 businesses that are just aging. I like Wyoming. A lot of people talk about Delaware, but what people don't talk about Delaware is the franchise tax that is due to Delaware. So just to have a business there. So you have to pay your dues every year to them, or your business will not be in good standing. So if you're not planning to do anything with your business, Wyoming is probably going to be a better option for you. Florida is also good for tax purposes. Alaska, New Mexico, Nevada. Those are all popular locations as well. But a lot of the reason why people buy shelf corporations is to bypass that waiting period, because people are ready right now and they don't have a business. So they want to buy a shelf corporation that is ready to go. And sometimes that makes sense for people, right? Because it's already set up, it's got some trade lines on it, so it's good. Or you can buy a shelf corporation and then buy some trade lines on it. I sell business trade lines that we can add history to. So if the business is 8 years old, we can add 4 years of history. So we can add 6 years of history. But if the business is 4 years old, we can only add 2 years of history. So we can't really add anything past that 2 year period, right? First 2 years. So, another reason why people buy shelf corporations is the convenience of securing an entity without taking the time to build it from scratch, right? It's already seasoned, it's got some age on it, which that's what seasoned means. It just means that the business was established some time ago and has some age to it. And the older a corporation is, the more valuable it is, because that shows credibility, especially when you're going after funding. So I had one of my clients recently, he had bought an aged corporation, and then he bought some trade lines to add to it. And then he has a credit partner that he's going to be applying for credit under that has a great credit profile. So it's a win-win. It's a great situation. And you can use it for asset protection and privacy. The only thing is, like, when you are buying shelf corporations, you have to understand what you are buying and understand a lot of people overcharge for these type of things, and they're very expensive, as we all know. And in fact, I don't know anyone that I would recommend at this point that sells aged corporations. Um, I don't know anyone that I would recommend at this point, but I'm sure someone will come across someone that is, solid, that we can all trust, that would offer age corporations if you guys were looking to buy one. But in the meantime, start your own aged corporation or start your own business and just let it age. Even if you buy an aged corporation, you're still going to need to start a couple of your own, and you can start your own for much cheaper than what you would be able to buy one for. Because, like, just a couple weeks ago, one of my clients was trying to be sold a corporation that had only been established for 18 months, not even 2 years, 18 months. And they were trying to charge her $2,000 for it. And I said, hell no, it is not worth it. It's not even 2 years old, and it's the guy's name. Like, no way. Some things are just not worth it, because it would have to go through a name change, and it's just they're overcharging already. So just beware of the pros and cons. A lot of the cons of buying a shelf corporation is sometimes they can come with like liens if there's tax issues in that state. Like, for example, Delaware, you have to make sure that you file the franchise taxes every year and you pay. So you have to make sure that the business is in good standing. There's no UCC filings attached to it. So you would need to pull a Secretary of State a good standing certificate for that business to make sure that it is in fact in good standing. And some resellers will reinstate an old dissolved corporation that doesn't belong to them and sell it to you. Buying a dissolved business is no good, okay? There's no purpose in you buying a shelf corporation that has been dissolved, because they can see that in the records. So it doesn't matter Basically, what the banks are going to look at is when it was reinstated, that's when it starts. So there's no point in buying a shelf corporation that has ever been dissolved. Okay. So an example of that is someone selling a shelf corporation that's 30 years old, but it was reinstated after being dissolved for 10 years. No, we don't want that. Okay. No good. Another thing is, being sold with a bad reputation. So we don't know what the history is with the business until we fully take it over. So that's another thing. Sometimes people say, "Oh, it's sold with business trade lines, it's sold with this, it's sold with that." Well, let's see what it's sold with, because a lot of times when you buy a shelf corporation, it's nothing. There's no tax returns, there's no trade lines, there's no nothing. It's just a business that was started and it's just with a random name, and someone just set it on ice, made sure that the annual reports were filed and everything was kept to be good in standing, kept in good standing with the state, and now they're selling it to someone else. And this is also something that you can do as well, as you can start businesses and then sell them as shelf corporations. And you can even say, "Hey, I'm selling a shelf corporation that has these business trade lines on it, that have this amount of history on it, that's worth this much, that has credit reports that says your average approval is already $40,000 with this business." Someone would pay $10,000 for that. Someone would pay 10,000 at least. I've had people quote me $10,000 for shelf corporations. Okay. So it's another great way that you can make money by starting this business, right? This is just another revenue way, another revenue source that you can use to be able to make money and advertise it, because so many people out there in this business credit world are always looking for reliable shelf corporations. And you can partner with credit repair people, business credit people, and sell shelf corporations. It's a very easy way to make money, guys. Let's talk about foreign entities. So I had a lot of experience with this back in the day when I worked in the security industry for over 10 years, because when I first started with the company, we were this little itty bitty company, like out of like someone's garage in California. And we grew to be this humongous corporate company that was in like half of the United States. So it was a very fun process for me to be able to learn. And that's one of the ways that I learned about business, was through this company and starting their companies in all of these different states for them. Because eventually I said, "Hey, look, let me take over your operations. I want to learn how to do all this stuff." Because I want to be able to, one day do this myself, for number one, but it's great experience so I can know what to do. But it taught me a lot. So basically, what a foreign entity is say I start a business in California and then I opened up a branch in, say, Florida. Then I can start a foreign entity in the state of Florida by using an address with, say, Opus. And funny enough, all of the addresses that I purchased back in the day to start all of our foreign entities in all of these different states were with Opus virtual offices. That's how long Opus virtual offices has been around for. I used them back in the day and I built a relationships with them so long ago. I still have a relationship with them to this day, which is funny. But you can expand your geographic funding ability. So if I started my foreign entity in Florida, that would give me access to like Truist and some of the banks that are only in the Florida market, right? If you plan on selling products or services in that state, you're going to need to open up a foreign entity. When I was in the security industry, we were opening up our sales and marketing, and I actually was I was their operations manager. So one of the departments that I was in charge for was their call center. And they had hundreds of call telemarketer representatives that would call these states, schedule appointments for sales reps. So we had to be licensed in these states because we were providing a service, right? And if you are selling a product or service in a state, a lot of times you have to register as a foreign entity in that state, and you also have to pay taxes on the products or services that are sold in that state. They want a piece of the pie, right? But that can also, get you access to some of the funding opportunities that are available to some of those states, right? And if you are planning to hire in other states, that's fine as well, but you're going to need to have a foreign entity. Some of the cons are filing and record keeping could get messy because every state is different, and some states require certain things and other states don't, right? It can also get expensive, especially if you're trying to grow too fast. And beware because every state has different rules, taxes. Understand each of the taxes, franchise tax filing requirements, because again, I was kind of blindsided by Delaware and it's mighty expensive every year. And I just started a business there to age. So I wasn't, real aware of their franchise tax fees because all my other businesses were in Wyoming, which super cheap. There's like nothing out there if you're not revenuing in the state. But you also must have, sufficient presence in the state and be engaged in business in the state. So you're also going to need to make sure that you get a virtual business location in the state. I like Opus. I also like the idea of trying to partner with a small business out there that has a brick and mortar location. I like printing locations that are owned by like mom and pop places because I'm like, hey, can I just like put a mailbox and call this like Sweet C and pay you like $100 a month to like get mail at Sweet C at your location? Because no other business is going to be at that location, and every business can be a different suite. So it makes it, very unique, and it can open up a lot more opportunities versus using a virtual office that, say 20 other people are using, right? So just be mindful of that. Um I talked about this earlier, but I just want to kind of reiterate the RM deal, relationship managers, building relationships. If you are on LinkedIn, start adding, go do a search. Relationship manager, business banker, banker. Start looking up these keywords and start adding these people as friends and reaching out and introducing yourself and asking when you guys can speak and build relationships if you don't have someone like a branch near you, right? This is an easy way for people that don't want to go to a branch to build a relationship online with someone and not even like necessarily have to go to a branch, right? LinkedIn is a great way to do it because that's where all the business professionals like relationship managers are at. Funny enough, someone online was like talking about a relationship manager at a bank, and I was like, oh, wow. I'm going to see if I can get in touch with that person. And sure enough, I messaged them on LinkedIn and it was the same person. So that just goes to show you that these people that are relationship managers, their job is to bring business into the bank. They are incentivized to bring people into the bank, and they want to get you funded. So that's why it's important. And they know what data points are getting funded for what product, right? Because when people talk about funding, there's so many different types of funding. It's like, well, what are you talking about? You talking about equipment financing? You talking about merchant cash advances? Are you talking about business line of credit, business credit card, business equipment loans? What are we talking here? There's so many different ways that a business can get funding. So that's why it's important for you guys to be educated on all of these different ways, because someone can really pitch you on, getting you funding and it really sounding good. And then guess what? It's a merchant cash advance funding, and it's really like horrible, right? It's not what you want. You don't want a daily payment. You want a monthly payment. A monthly payment is more doable than a daily payment. A daily payment leaves a lot of opportunity for you to mess up or to make a late payment. But a monthly allows more planning, but is going to be a higher amount, obviously. So you just have to plan for that. Um, Now, when you work with a banking relationship manager, the great thing is that you can ask for a credit limit increase before you even activate the credit card. Even if they say, well, why don't we wait about 3 months and then you can come back? Perfect. Let's go ahead and run up that card for the next 3 months and go back and let them know that you need a limit increase because your business is, doing well and you're spending and you're paying. And I always tell people, put all of your bills on that particular card, everything you do, and then just pay your cash to that card so you can show that you spend, pay. Now using ChatGPT and AI can be very useful, especially when it comes to business planning, creating like your standard operating procedures. A lot of times you can even find banks and credit unions that have special offers in your area. You can ask ChatGPT and AI to give you a list of all of the top 0% business credit cards from local community banks near your city, or whatever prompts you choose. No document business lines of credit in the state of California or in the Bay Area or wherever you're at, right? You can get really creative with ChatGPT. I really love it for that. And you can also use it for marketing, for social media. A lot of times people don't know what to plan for or they don't know what to write. Use ChatGPT. If you are looking for a job or if you're offering services, writing resumes can be another service that you guys can provide using ChatGPT. ChatGPT sounds great. Sometimes you have to modify it a little bit, but you want to make sure that when you're giving ChatGPT prompts, you're being very detailed and the tone that you want it to deliver. And in building resumes, you would want to be very detailed in the type of position that you're looking for to be catered to that type of job. So that's something that you guys can also do is, provide ebooks, provide resumes. ChatGPT can give you content ideas. You can write credit repair letters. And again, you want to make sure that you're using a tone and you can insert parts of the law to get the letter out there. But at the end of the day, when it comes to the credit repair dispute letters, you really just want to make it seem like it's coming from a real person. It's short, sweet, and simple, right? Account name, account number, nothing out of the ordinary, right? You can also use ChatGPT to help with any sort of arbitration. I'm actually speaking with one of the guys that I've been working with in the credit repair industry for a while now that has been killing it in basically just acting as a consumer advocate and helping consumers recover funds from collection agencies. And one of his latest clients got like $100,000 settlement. So I'm working on a date to bring him on so he can share all of his success that he's been having. And that's going to be exciting. So I'm thinking it's going to be in July that he's going to come on and talk about that. But that, this can also help with, like I said, any sort of demand letters, arbitration, if you want to go through Experian arbitration, or if you want to even request arbitration through Equifax or TransUnion, you totally can. Demands for creditors. And again, it's all about the prompts. You have to be detailed. You have to tell it what type of tone you want. And if you don't get the outlook that you're looking for, just try some different variations. And like here it says, I want you to advise me like an SBA consultant would. Please create an SBA compliant business plan that I can present to my bank for my industry, for my business industry. And these are the type of things that the banks like to see when you come to them and you're prepared and you look professional. Um, those are the things that the bankers like to see. And when they ask you, "Oh, what does your business do?" You're going to have to answer to them. And you don't want to say credit repair, okay? So you got to sometimes be um, a little bit creative sometimes, but safe words are business operations. I help people with their business operations. That's it. Okay. How to get funding for multiple businesses. Well, you first have to prioritize and say, for example, you have business one, you have an LLC that's open. It's been open since 2014. You have tax returns filed for each year. You have business checking account with the bank since 2015, consistent monthly cash flow, and it's a low risk industry. This looks like a winner for me. And then you have business two with basically a bunch of high risk looking stuff, right? No tax returns, high risk industry. Now, obviously, when we're looking at prioritizing funding, we would want to go with that first business because it has tax returns, it has some age. Ideally, when we are going after funding, we want the business to be at least 2 years old. So that's why it's better to start a business before you're actually ready to start a business, because it's a lot easier to get merchant accounts. It's a lot easier to get business credit cards, business lines of credit, anything, because your business has been established. Because they think, well, if a business was going to go out of business, they would probably go out within the first 2 years. That's their thought process, right? So you just want to make sure that you understand a lot of these data points. You want to make sure that your NAICS code is low risk, right? When they're asking you, what's your NAICS code? You're not putting something that's high risk. I put a lot of low risk NAICS codes inside of the school community. So if you just search NAICS inside of the post, a bunch of those low risk numbers will come up for you guys. Let's talk about the threshold and total credit exposure. So a lot of times you're only going to have a certain amount of funding that you can get from certain banks, right? And in general, you have to kind of look at it like this. If you are credit seeking, the banks are not going to want to give you funding. So that's why you can generally get anywhere from $50,000 to $100,000 per round of funding. And you want to wait anywhere from 3 to 6 months in between each round. So that's why a lot of times when people sign up with funding companies, they do it in rounds. So they're like, first round is this, and then maybe they wait 3 to 6 months, and then they wait for the second round. You don't want to have no more than 4 new hard inquiries in the last 6 months. So if you do, you need to work on getting those removed. You can totally get all of the business credit inquiries removed. That's why it's so important that once you have a good personal established credit, you just put it on autopilot and you move everything over to the business side and start getting funding over on the business side versus using your personal credit, because there's so many people out there that have started businesses that I've even helped get credit cards on their personal side, and they've over leveraged them with like marketing, good things, not bad debt, but again, it's debt, it's business debt that they are taking on their personal side. That's a no, right? We want to do that on the business side. So want to move over and make sure that you guys are selecting the low risk NAICS code on the credit card application. So this is the Bank of America credit card application. And Bank of America is one of those banks that primarily is just looking at the personal credit. Even though they are asking you for your federal tax ID, which is your EIN number. Your EIN number and your tax ID, that's the same number, okay? That's your business's social security number. And they're asking you right here, what's the type of industry? What is your gross annual sales? What is the year established? When did you start your business? Again, they are going to be looking at the Secretary of State, so you need to make sure that this information aligns with the Secretary of State. That's why it's so important to have your business ID card saved in like Google Docs or something, because you're going to have your business EIN number, you're going to have your NAICS code, you're going to have your industry type, you're going to have the month and year that your business was established. You're going to have all this stuff documented on a business ID card. So that way, when you go through and you put in this information into your applications, the information is the same. Okay. The address, everything down to the way that you spell sweet. If you spell sweet STE, or STE, spell it that way on all the applications, okay? Don't mess up and put different information. But all of this business type, just select what's best applicable to your business. I can't say that everyone's going to qualify for a consulting business or a technical business, but again, try to stay somewhat within your category of what's generating your business revenue. Because Bank of America is also very open to many businesses, but they do want you to be honest. Because if you're in the trucking business and you put down that you're a consultant, that's going to be some red flags for them, because they're going to probably look at your business. They're going to look at it online and stuff and see that like, how is this business a consulting business? So that's going to throw up some red flags for them. So be honest to a degree. Obviously, credit repair is challenging, but I have a business that is a credit repair business, and I had a business bank account with Bank of America, no problem. So they did not even ask me. They did not care. So they were fine with it. These are some of the categories that you can see here. Educational services is something that people often choose that are in this industry, because we are educating people in our community. We are educating people online. There's some education going on there. You can see there's also, many other things, but just pick what's what's best for you. Computer programming, data processing, and other computer services. This is one of my new favorites because it's super low risk, right? You do not want to pick credit reporting services because that would be high risk. Here is what it would look like here. You can pick business consulting services as well if you select services. It's always best to apply with these type of banks as a for-profit business, because a lot of them are asking you like how you're making a profit too. If you are a nonprofit, then you want to go to banks that specialize in nonprofits, because a lot of these banks that we talk about, they are for profit. Even if it's a nonprofit that's showing revenue, these are for-profit funding banks. Here is American Express's application. They're also going to be asking your industry type, and it's best that you pick something that is close to your niche. If you are doing credit repair, you can put other, but finance/real estate is considered high risk. So don't be afraid to put other. You could just put consulting or educational services, something to that nature. This is what Chase's application looked like. Now, notice here, business category, then they give the sub business, right? Business type, NAICS code, this will populate. Monthly spend, estimated monthly spend. This is one of the questions that Chase is going to ask you on their application. This needs to be a high number, right? Because they're not going to give you what you don't plan to spend. They want to give you what you're going to spend, right? So if you want 30, 50, 70, $80,000 with Chase, this number needs to be closer to 50 or whatever number you're trying to get. If you want 30, this number needs to be like 40, right? Always go a little bit above because they'll counter, right? So that's important to understand that they are asking you that for a reason, right? So you can select, whatever business category is close to you. Like I said, the NAICS code will auto populate for you. So if you notice that it's wrong, you can always update it before your application is submitted. one of the lower risk categories that a lot of people use is the 541611. This is a pretty good general one. Chase is okay with it. So this one's okay to use with Chase, no matter what kind of business you have, because it's kind of like management, scientific, tech consulting. You can do like admin, general consulting. That's what this next code is for. So that is fine as well. And if you wanted to add anybody to the card as an employee, that's fine, but it wouldn't report to their personal or business credit. Now, let's see here. If you apply for a credit card and you are denied, you need to call the reconsideration line. So most banks out there on the business side or personal side have a reconsideration line that you can Google and just say, hey, what's the reconsideration line for Chase? And call and see why your application was denied. Because even with Chase, so I had a client recently. Here's a great example. He had a fraud alert on his credit report. And on his Chase application, he did one on the business side and one on the personal side. He was denied for both. And I was like, man, there's no reason why you should have been denied. You need to call the reconsideration line. So he Googled the phone number, found the number to call, and called them. And sure enough, it was denied because of the fraud alerts that are on his credit report. So he verified himself. They called him back at the number that was on the credit reports and he verified it. And then he actually got approved for both of the credit cards on the personal side and on the business side. So it's important for you to look at your credit reports before you apply. Make sure you don't have any fraud alerts so you don't even have to go through that, because you don't want a consumer statement getting you denied for credit. It's the number one reason why people are denied, because they went through credit repair, or maybe they disputed some things on their credit, and they now have a fraud alert on their credit report. And the worst type of fraud alert is when it's a short one with no telephone number, because on the application, they're going to see when they pull your credit, oh, well, they've been a victim of fraud, so we would have to call them before we extended credit. And the only way for someone to call you is if your phone number is listed on your credit report. That's the only way to get around it. If your phone number is not even listed on the fraud alert, there's no way that they can even approve you for the most part. So that's why it's super important to get that fraud alert removed. All you have to do is call the credit bureaus, tell them I can't apply for credit. You have a fraud alert or you have a consumer statement on my credit report, and I want this consumer statement removed from my credit. Now, sometimes when it's dealing with like Equifax, you're going to have to mail in a request to them as well. And it can be literally a handwritten letter that says, please remove the consumer statement from my credit report, and attach proof of address, a driver's license or some sort of photo ID, passport, that's fine. And if you don't want them to give you any slack, copy of your social security card. So that way they can remove that for you. Another really popular thing that's happening right now, not only for a lot of my clients, but I see this with a lot of the people that I work with, is in a lot of their clients, is Equifax credit scores are not showing on the credit reports. So what happens is when people start disputing information on their credit reports with Equifax, and the address does not match, and they're not able to verify that this is the person that they're supposed to be speaking with, they'll lock the credit reports, and it'll almost be like you don't exist. And this has happened to me. It happened to when I moved, because the address changes. If you've recently moved, Equifax is going to start doing this. Basically, how we have to correct this is, when you call them and try to correct it, they will act like everything is fine. They don't know what you're talking about. They will act like there is no issues in the world. Everything is fine. There is no locks. There is nothing. Well, they don't know anything. So in these cases, what we have to do is write a letter and send it in writing to request them to unlock our credit reports, let them know I cannot access my credit reports. Yes, I have actually moved. I think you may have had an old address on file for me, but here is my correct address. I have attached a photo identification of myself along with current proof of address. The proof of address must be dated within the last 2 months. Okay. That's really important. It has to be dated within the last 2 months. Okay. So any sort of utility bill, that's fine. Insurance statement, bank statement. But it has to be from like an official company. I've had so many people that I've tried to use like proof of addresses of like a utility where they're like super past due. Probably not the best proof of address to use. Let's try to be, use something else. Maybe, proof of insurance if we have that, car registration if you have that. Anything else that you might have, like a bank statement, we don't need to give them, your bank ledger, but maybe just a screenshot of the front page that includes the dates and the logo so they can confirm that it's from a legitimate bank. And, sometimes we just have to get creative, but they're definitely going to want that information. And it's best practice to send in a copy of your social security so that way they can't say that, well, we don't know if it's for sure you. To be on the safe side, send two proof of addresses, ID, and social card if you are locked out of your Equifax. Let's open it up for questions because that was it for the part two. And then next week, we're going to be wrapping up business credit. I actually have a meeting with a lady tomorrow that I'm excited. I'm going to see if she's going to be able to come on next week and talk. But she's actually from a business vendor account that reports business trade lines as a vendor. And she has better stuff and better pricing than a lot of these other vendor accounts. And they report to a lot more of the business bureaus, and you can self-report to Dun and Bradstreet. So she's got some cool things going on, and I'm going to see if she can come on, and we're going to be talking about some other business bureaus or business data companies that are out there because there's a lot more than what we have discussed. Those are just the top ones, but you guys just have to be aware that you just have to put good data out there, and that's what's going to be on your reports because it's usually a blend of your business and then the owners that are associated with the business. Those scores get blended in as well. So does anyone have any questions? You guys are always so quiet.
Hi, Nicole. It's me, Jay.
Hey Jay, what's up, man?
I got a question. You know how we get that monthly report from Smart Credit that you guys make
Yeah.
for us? Is that when we get those, are those pretty much up to date?
Well, the thing about credit monitoring is we get one fresh report every 30 days. So there's going to be a new report that you can pull, every 30 days. So when you're looking at the data, you just have to understand, okay, this data that I'm looking at is as of this date, right? You may have gotten some updates on like Credit Karma that some other things have changed since then because things can change daily with this type of stuff. So you won't be able to get a fresh report from Smart Credit. If you just pulled your report, say like 10 days ago, you would still have 20 days until you got a new report.
Okay. And when we go online to, let's say, look at the Equifax, TransUnion, or Experian, are those pretty much up to date?
Those are pretty up to date. And again, you're always going to be looking for that as of date because usually, like, say, for example, you're using Experian, right? Experian is going to give you weekly updates, right? And they're going to say, well, your credit score is as of, is 700 as of this date, right? So you know that data is as of whatever date that they put on there. Now, when you go and look at your credit report with them, you just need to make sure that you're also looking for that date, because sometimes the data is not synced. Sometimes I've seen that a lot
Yeah.
with Experian. Like I saw somebody's report that hadn't been updated for years, right? It was really weird. So you just always want to make sure that you're looking at the date for whatever platform you're using. They're going to tell you the data as of this date. And they'll
Thank
tell
you.
you how they're calculating it too. Like Experian, they use FICO, but Equifax, I don't think they do on
I
their
don't think so
site.
either.
Yeah. Like Credit Karma. Credit Karma is great for data. Don't get me wrong. I'm a fan of Credit Karma because it helps keep you up to date, and it kind of gives you an idea of where you're at. And also, just so you guys know, if you ever plan to do Airbnb and you rent properties use Advantage 3.0 credit scoring model most of the time. So if your Experian, or not your Experian, but if say your TransUnion three Advantage 3.0 score is like a 740, if that property company uses TransUnion, they're going to see that same 740 credit score for the most part. So that's the one company that does use Advantage credit score are property management companies, because it's a cheaper way to get people's credit scores and credit reports.
Thank you, Nicole.
Yeah, for sure. Any other questions before we ended up tonight? I know last week it was like 4 hours. Like, oh my God, it was so long.
I have a quick question.
Yeah.
So who deal with a lot of clients, what kind of budgeting software or tools do you have if you have clients that have issues with, just maintaining? I know one thing you mentioned about well, I think it was one of your Zooms, like a credit card monitoring where you can monitor the closing dates, post dates.
Mm-hmm. Yeah, I have that tracking log, and I'll post it in the school community. You need to have your clients fill it out, because here's the thing. Clients are never going to be accountable for their actions. Okay. They rely on us to give them direction. A lot of them are like, well, just tell me what to do and I'll do it. Right. So we kind of have to lead them in a way of, getting organized. If they own a business, they need to get set up with QuickBooks. Okay. If they need help with budgeting, they need to be organized enough on the personal side before they go over to the business side, because they're just going to cause more damage on the business side and more debt if they're not organized on the personal side. So I would have them fill out that credit card tracking log and understand, how to basically pay off their credit cards with the smallest balances first, so we can get as many credit cards to a zero balance, basically the snowball effect, right? And that way, even if she has a couple, or he or she has a couple larger limit credit card balances, they still have a few credit cards that are at a zero balance.
So you suggesting QuickBooks as far as with the budgeting
Yeah,
and
if they
monitoring
if
and
they
everything?
need help, because QuickBooks is pretty much integratable with most banking platforms out there.
Okay. Hmm.
And if the person plans to get like American Express, they can integrate with American Express. And another reason why I like QuickBooks is because, say, for example, they make purchases that require receipts. With QuickBooks, you can download the app on your phone and you can take a photo of the receipt right then and there. So it's basically paperless. So if I go to get gas, I'm going to be pulling up my QuickBooks app, taking a picture of my gas receipt so I can throw my gas receipt away. You just upload your receipts to QuickBooks. It makes your accounting a lot easier. And pretty much every accountant, every CPA out there is familiar with QuickBooks. This QuickBooks is exactly how I learned accounting. I don't provide accounting for anyone. I've done it in the past, and it's just not something I enjoy doing. But I was great at doing it for another business, but it's like even I pay someone to do it for me, right? But you also want to make sure that you understand there is a difference between accounting people and CPAs, right? There's a lot of people out there that can help you with your taxes or that can help you with your books. But in reality, you need to ask them, are they a licensed CPA in your state? Chances are they are not, but they are able to transmit taxes to the IRS. Though they are not who we are looking for. We are looking for a licensed tax professional, even if you have um like a bookkeeper. Say, for example, you need help with bookkeeping because you need help getting organized. What I would do is I would take the accountability to make sure everything was uploaded to my QuickBooks account. And then I would hire someone from the Philippines that specialized in accounting that has a college degree that'll work for, whatever, $5 to $10 an hour, and do your bookkeeping for you a certain amount of hours a week. So that way, when you meet with your CPA, your bookkeeping is done and your CPA doesn't need to do, you know, tasks that are going to cost you, $75 to $100 an hour, right? Everything's already categorized in there because you paid for data entry. A lot of times that's what bookkeeping is just data entry, right? So you can easily outsource that to someone that has, experienced, and that is pretty cheap, outsourced either, in the US or out of the US, depending on what your budget is and what you're comfortable with. But understand you're still going to need a licensed CPA in your state.
Okay. I noticed that you touch a lot on your virtual assistants, and I was looking into a couple of your platform. I actually reached out to a couple of them because I'm in a process of hiring. You've
Okay.
been doing pretty good with that.
Yeah, here's the thing. I like to always extend out as many fishing poles as possible when I'm looking for somebody, right? So what I recommend is signing up for phjobs.online and paying like the $69 for membership with them. And you can post 3 job ads, and they can be similar or they can be different. And a lot of times what I do is, if I don't need to hire for anything else, I just need one job, I still post 3 different ads and have different titles with similar job descriptions. And again, using ChatGPT to help with the job descriptions. But I also put something in the description to say, if you really read this, reply with this in the reply line, right? So if they don't read it and they don't reply with that in the reply line, I know that they didn't read it. So I'm looking for people that are detail orientated. So that's one way you can weed out a lot of people. And then what I do is I have a group interview. So I tell them, hey, next week, say like Monday, if I was doing like my recruiting on like Wednesday, I would do my recruiting Monday, Tuesday, and Wednesday. And I would recruit as many people that read the description, that replied in the way I wanted them to reply, right? And that had at least like 1 years of experience. And I would tell them, join this Zoom call on, Monday at this time. And I would do my Zoom call later in the day because, you have to look at what time it is in like Manila, wherever you're at. So, and understand like, you don't want to do it at a time that's like inconvenient, like in the middle of the night for them. So usually I have my Zoom calls for my group interviews at like 4 p.m. or 5 p.m. in the evening because that's like the morning time for them or whatnot. And whoever comes to the group interview, I'll document it and I'll go over like some basics of what's expected in the job. And then I'll let them introduce themselves and tell me what they specialize in. And then I'll do the second interview with them one-on-one. And if that all works out, I'll hire them and make sure that they just sign the non-disclosure agreement and get them onboarded.
Okay.
Are you looking for just like credit repair dispute people?
Really just for somebody to run my back office. I've been doing a lot of things hands-on, but it'll mostly be like the HR just running the back office as far as filing, keeping client portfolios in order.
Marshall does that. She's US based. So, depending on what your budget is, we have US based option with Marshall. Have you reached out with her to her?
No, that's March. That's one of your staff teams who
Yep.
are
I will send
like
you I'll send you Marshall's information. If you send me your email address in the school app, I'll email you Marshall's information because they provide USA back office. So she'll kind of be like the operations director. And she already works with a ton of my clients, currently getting them some great results. So that way you don't really have to worry about that. But some people, they're like, oh, I want the cheapest option possible. Well, cheap options also provide cheap results. Sometimes it takes more time to train, so you just have to be prepared for that. But also, when you are training your virtual assistants, you record everything on Loom. You guys need to subscribe to Loom, LLL or LOOM. So that way, every time you record any sort of training, it's recorded, right? And you can basically use all of these Loom videos as a course or a training module in the event that you have to hire somebody else. This is how everyone trains their virtual assistants because everyone has kind of like a certain way that they want things done. There's a gentleman that is pretty big in the industry. I don't want to say his name or whatnot, but I also work with one of his clients or whatever, and she's very close with him, so she tells me a lot of his secrets, and I appreciate that. But it's not really secrets, it's just sharing information. But it's not just sharing information, it's kind of already confirming the information that I already knew, right? So she was like, yeah, all he does is record Loom videos of everything that he does. If he's filing a CFPB report, he records a Loom video. If he files a BBB complaint, he files a Loom video. If he files an FTC report, he records a Loom video. And that's the same thing that I was doing when I was training my VAs. Every time I did something that I no longer wanted to do, I would record a video of the steps that it took to complete that task, and I would send it to my VA like, here, I need you to do this. But all you have to do is just record yourself going through it once, and that way it's documented and you can build a training module in the event that you ever needed to train somebody else. So this is a great way to document and train your VAs because I've had many, many, many VAs over the years, and some are great and some are not that great. But that's why I like to do the virtual like group meetings as far as the interviews because I usually have pretty good turnout. I usually have about 15 people turn up, and I like to be able to communicate well with my VAs, so it's important for me to be able to speak to them and understand that they speak English well and understand English well, type English well, they spell. Another app that I use and I have all of my VAs use is Grammarly. Grammarly is really great and it helps with spell checking. It's an AI tool that is free, so you don't have to have a subscription. The subscription is like, a step up, but this is a free tool that everyone can sign up for. and it helps with, proper ways to say things. And, I have the paid version, but honestly, the free version I had for a long time, actually a couple years before they finally sold me on the paid version. But it's a great tool because even like apps like Credit Repair Cloud, they don't have spell check in them. So when you have Grammarly enabled on your browser, it will spell check everything inside of Credit Repair Cloud. It'll help, catch errors. And if your VAs are emailing your clients, it'll help catch things like that as well. So it's a cool tool.
Okay.
Hey, Nicole.
Yes, sir.
This Marlon. I wonder, I know you touched on it a little bit. How would you know if you on your when someone's credit report is on a fraud alert?
So fraud alerts are always going to be listed under the consumer statement. On Identity IQ, Smart Credit, you're always going to see, well, actually, you might not see the, most of the time you'll see the consumer statement on there. If they have My FICO, you're gonna see it lit up like a Christmas tree. As soon as you go on there, it'll have a check mark if there's a fraud alert on their credit report. But the telltale is looking at the consumer statement. Sometimes if you are concerned, go directly to the source, meaning go directly to Experian, go directly to TransUnion, go directly to Equifax, or you can use MyFICO. MyFICO is pretty spot on, and you're going to see all of those fraud alerts on your MyFICO reports as well.
Okay. All right. Thank you.
Mm-hmm. And you could try to get the fraud alerts off over the phone. I have had some people had success with it because if you are purchasing a trade line or if you are selling a trade line, and this is something we're going to be talking about in July, is starting a trade line business in addition with your credit repair, because the two go hand in hand. I mean, God, I love trade lines. I cannot tell you guys how lucrative of a business trade lines are. And I just have had so much success with them, especially when I ran ads for trade lines. I used to kill it because I don't really see a lot of ads for trade lines. So it's very different. So it attracts a lot of people. But and most people aren't even ready for trade lines, but that's great for you guys that fix credit, right? But we'll be talking about that. But if you do get a trade line added to your credit on the personal side, you have to make sure that fraud alerts are removed, because I had a gentleman, he's like, oh, my trade lines haven't reported. I said, all right, give me your Experian login. I log into his Experian, and he had all 3 credit reports with Experian. I see the fraud alerts. Experian, you can see the fraud alert as soon as you log into Experian and you look at the credit report. You'll see, the consumer report, and it's like, boom. I was like, oh man. I said, you gotta get these fraud alerts taken off, man. So he called and got the fraud alerts taken off. And then within the next couple days, the trade line reported, and it was a Chase trade line. So that can actually prevent trade lines from reporting, and it can also prevent you from getting approved. So if someone is concerned with someone using their credit to the point where they feel like they need to put a fraud alert on their credit, their best option would just to keep their credit locked until they are ready to apply for something. But when you unlock your credit, allow sometimes 48 hours for it to populate through, because I had someone that tried to apply for something the same day that they unlocked it and it wasn't working. So it sometimes takes a minute to process through and to populate that the file is unlocked. And that's another method that people use when they are applying for funding with certain banks and they don't want them to have access to, say, TransUnion. If you are applying for banks at pull Experian. You don't want them to have access to Equifax or TransUnion. You lock Equifax, you lock TransUnion. That way they're forced to only look at Experian, or they're forced only to look at TransUnion. Did
Nicole,
someone have
this
a
is
question?
Tiffany.
Hey, Tiffany.
I wanted to ask you, we talked a lot about funding, and as a credit repair business that primarily would work from home and have low overhead, what would funding be needed for exactly?
Marketing, running ads. The biggest expense in your credit repair business is going to be marketing. Creating
And
content is part of marketing as well. So you might need to invest in, video editing. You might need to, do a photo shoot, things like that. So marketing is really important because once you have an established social media platform, you need to drive traffic. Even if you have other resources out there, referrals, those are all great because you need multiple streams, right? Multiple streams. So one stream is going to be social media. And a great way for us to drive traffic to us on social media is to run ads on social media. It doesn't need to be anything crazy. It could just be like, $25 a day or something like that, right? But a business credit card is best for that, especially like the business American Express Gold credit card, because say, for example, I spend $5,000 a month on ads with Facebook or Meta or YouTube or Google, whatever, whomever. I would get 4 times the amount of points on my two largest business categories, and ads are one category. So if I'm spending $5,000 a month in ads on that business gold card, I'm going to get 4 times the amount of points on that spend, which is really good. And a lot of times the business gold card, you can revolve it, although you don't necessarily want to because the interest rate is really high. But it's nice to have that option because sometimes, like, we'll go heavy for like 3 months on ads and then, like, we'll let up because honestly, what I've noticed in this business is the slow time is October, November, December, and January. It slows down tremendously for me around that time. My busy months are February all the way through September. And that's when people are getting their tax returns. There's just more money. It seems like around the holidays, a lot of people are kind of cutting back on extra expenses because they got Christmas and Thanksgiving, and they're all recovering from that. And then they start getting their tax returns around March, April, whatever. But there's more money put out, especially around summertime for a lot of us. So that's really when we need to be focusing on our marketing. For example, right now, I am spending $2,500 a month on my marketing with one marketing company, plus ad spend, which that's probably 5,000 just on one avenue. Plus I have another marketing company that I use that does my content automation. That's probably another couple $100 a week, but it's all worth it because you have to be consistent with content. Like, I have one of my clients, she did so well with content and then she fell off. And when you fall off, you don't do as well, So you have to be consistent and you have to be able to drive traffic to that content.
okay, that makes sense.
That's how I got a lot of my clients early on when I first started my credit repair business. And honestly, I started by just boosting posts on Instagram, and I used to get a lot of clients that way. Like, I still have people to this day that I work with that I got from those ads, like long time people that just keep messing up and coming back,
Mhm.
And God bless their souls, but they're like lifers. I don't know. Like I will break up with them and be like, we're done. Bye-bye. And they'll come back. It's crazy, but you're always gonna be their go-to, and they refer people to you, and it's great. So um I used to target, a lot of like local people because local people like to do business with local people. But then I started advertising in all of the states that have low credit scores. And I basically just did data research and looked up what are the top 15 states with the lowest credit scores. And I would run ads to all of those states.
That's interesting. How would you target um, social media ads to a particular state when it seems so across the board?
Well, here's the thing. So with ads are very unique with Meta. Meta is Facebook and Instagram ads, basically, right? So with Meta ads, there's what's called a special category, which if you are doing like ads for politicians or ads for gambling or ads for credit cards or funding opportunities, you have to elect a special category, right? Which means you cannot elect who you are targeting with your ads, which sucks, right? And a
Mm.
lot of times, sometimes they think credit repair people are like credit card offers or credit offers, which we're not, right? So we have to be very careful in how we run our ads, so they don't think that we are. So we don't have to be running our ads under that special category all the time, which if that makes sense, because when you run ads as a normal business that's not listed under a special category, you can target territories, you can target age ranges, which is much better for us, because in reality, if I look at my stats on YouTube, the data tells me who watches my content. If I look at the data and I read it, basically, I want to target people that are anywhere from like 28 all the way up to like 52 years old, right? That's a pretty big gap. Most of the time, it's like a 10-year gap for your niche, right? But in this industry, people are, starting a lot younger. Generally with credit, you'd probably want to start at like 32 or 34 years old, but people in this day and age are starting a lot younger. And also people that are a lot older are getting their stuff together because no one was ever taught about this stuff. And there's so much opportunity in our credit. It like rules our life. So, there's a lot, there's just a lot, but at the end of the day, I would say, just take it day by day.
Thank you. I will.
Absolutely. There's so much that we could do, right? But as long as we make a list of all of our goals with actionable items by a certain date, and we're achieving our goals, we're taking action daily, because in this business, you have to get shit done daily. You have to be an action taker. You can't expect to hire someone else to do everything for you when you don't even know what to do, right? So you have to have an idea of what your expectations are going to be in your business before you outsource it to somebody else. But one thing that I did invest early on with my business was social media automation. So I actually work with a team that automatically post all of my content to all of my platforms every single day for me, from to YouTube to TikTok to Facebook to Instagram. And if you guys want to sign up for social media automation, I will drop the link in there, because this guy does not even advertise anymore. He basically like got a deal with a company that prevents him from advertising. So I'm already established with him. So he's like, yeah, if you want to provide your people the same deal that I give you, that's fine. And I think it's like $130 something a week for them to post all of your stuff. You don't have to do anything but send them the videos. Now, I edit my own videos because I'm picky, but if you don't know how to edit videos, they will do that for you as well. All you have to do is just send them the raw footage, and you can send them raw footage of you just pointing up and looking up, so they can put something above your thing, and then, go like this to the camera. It can be simple. You don't have to talk, okay? That's the great thing about content. You just have to start. You got to start.
That's right. That's right. Thank you.
And mind you, I had no experience with content. I had nobody that said, this is how you run a YouTube channel. This is how you record. This is how you should set it up. It was a lot of trial and error and using different equipment and, just trying to figure out what's best. But there's so much out there. I just bought this new little gadget thing on Amazon, and it was kind of expensive, but it's like a 4K camera, but it's very compact, and it's got like a little tiny microphone that you can, hold. And it records in 4K, so it's supposed to be super great quality. I'll share the link with you guys on school, but I think it should be here Monday or Wednesday. And I'm going to try it out. I'm going to see how I like it, because it also follows you. So it's a smart camera. It's very small and compact, very cool. And if you move, it moves, and it zooms in and zooms out. So it makes your video that much more real, because if you're walking and you're vlogging, which is another way to create content without having to talk, is just you recording yourself walking outside with this little gadget, right? And if you did want to talk, you can. But if you guys don't notice, pretty much none of my short form videos I'm talking in. If you guys peep my Instagram, it's been like that for a long time. Like, I used to do just voiceovers because I hated recording content, but I just kind of got over that. But now I don't really do voice with a lot of my shorts. It's just a lot of text, words on the screen. But you have to pre-plan it. I always upload 7 clips for them to use for each day of the week. All you have to do is just set up your social media platforms and start the content, okay? Because you have to start somewhere. TikTok, you need a TikTok, okay? Sign up for TikTok, it's free, okay? They'll post there. You're going to use that same video. We can repurpose it to TikTok, Instagram, Facebook. You can also share it to Threads, okay? And then you can post it to Pinterest. You can post it to, what am I missing? YouTube Shorts. Create a YouTube channel. You can start uploading shorts to YouTube. YouTube is the #1 platform, guys. The #1 platform. Why? Because it's attached to Google. Okay? Instagram's #2, TikTok's #3. Some people, TikTok's #1, but TikTok's big, man. I'm late to TikTok, so my TikTok's kind of weak. I have a crappy following on TikTok, but I've also gotten a lot of business off of TikTok. I've made thousands of dollars off of TikTok, believe it or not. And it's my lowest performing platform. Actually, I just got a guy that I found off TikTok, or he found me on TikTok, and then he found me on TikTok, then he went to my YouTube channel, started watching me on YouTube, and then became a customer. He's referred his girlfriend, he's referred his dad. So that's how it goes. When you find people that you've helped, they're going to refer everyone to you. So that's why it's so important to, just don't overpromise to people. I never tell someone a time frame, and understand what you see on social media is often, how do I say this nicely? Identity theft. When people are getting credit repair results, like 40 items deleted, a bunch of stuff deleted that was theirs, that we know was theirs, chances are it was what's called a credit sweep, which is when people just claim everything on identity theft. Okay. Um, funny enough, one of those guys that I follow on Instagram, he does funding and he charges people like 10%, right? He's good at what he does, no doubt, and he makes a lot of money doing it. But he also is doing credit repair now, I guess, and he posted a letter from a bank, and I forgot what bank it was, but it was a bigger bank. And the bank said, we removed this trade line from the credit bureaus, right? Now, your average eye would just focus on that. But me being who I am, listen, let me zoom in on that thing and see if I'm seeing this correctly. And all of a sudden, at the very bottom, it says, if you're concerned about identity theft, make sure that you contact all 3 major credit bureaus. And automatically, I knew that's how he's doing his credit repair. He's a funding guy, right? He needs his client's credit cleaned as soon as possible. What's the fastest way to get things off someone's credit report when you just need to get funding? Well, if no one has told you before, I'll tell you, I'll be the first one to tell you what all these guys are doing. They're doing credit sweeps. How do you do a credit sweep? You go to the FTC identitytheft.gov website and you fill out all the negative stuff that's on a credit report and you put it on an FTC report. And, it's kind of like a process. It doesn't mean that everything's going to just melt off, but it does, speed the process up, right? And sometimes things don't always come off. And that's why I tell people it doesn't matter if someone is promised anything, we can't promise any type of one result. All we can do is try. And at a certain point, it's like, hey, we've been working together for 6 months or 12 months. There comes a certain point where either you have to tell someone, look, you're better off just settling this debt, or you are going to need to speak with a consumer attorney because I've done all that I can for you at this point. And sometimes the consumer lawyer can, help out in other ways. So it's just a matter of building those relationships. And that's why I'm trying to get my one guy on here to share how he's doing it, because he has a lot of relationships with consumer lawyers that are having some great success with collections. So.
Okay.
And I'll tell you, I've been in a lot of mentorships in the past, like bigger named people, or people that have, learned from those people, whoever, right? And to be honest with you, they've had a lot of great information put out there. And I started seeing like a pattern, right? And a lot of people would come on and they would talk about consumer law and they would incorporate consumer law into their letters, right? And then they would supply an FTC report in addition to those letters. And I was always wondering, like, well, if they're using the law, why do they need that? Well, what they were saying, and I'm not a lawyer, I don't give legal advice. I'm just saying what other people in this industry are doing. Most people in this industry are doing, right? The ones that are getting results really quickly. They're just doing credit sweeps. So that's what I consistently saw with a lot of these programs is they were just doing credit sweeps, and some people went the extra mile in filing a police report. I don't recommend doing that whatsoever unless someone has truly been a victim of identity theft, which, a lot of people have been a victim of identity theft, or they have some sort of, data breach that they've been involved in. So if you have been involved in a data breach, that's a reason that you could do an FTC report. The FTC reports are made at a government website, but they're not necessarily investigated or mandated. They're more or less just for documented purposes for the credit reporting agencies. And you can also send those to the CFPB as supporting documentation if you have been a victim of identity theft. But I've helped people that have been a victim of identity theft, and sometimes it's equally as hard to get things off when they truly are like something that doesn't belong to them. So it's a process. Either way you look at it, but I'll tell you this. I spoke with a gentleman this week who booked a call with me, and he had been getting credit repair for over a year now with a credit repair company. And I can always tell when someone says to me they've been getting credit repair, I know if they've been doing credit sweeps because I can look at their credit report and I can see their consumer statement. If they have fraud alerts, then I know that they're doing credit sweeps. If there's no fraud alerts, then I know they're not doing credit sweeps, right? So there was no fraud alerts on his report. And I said, oh, he's just using a regular credit repair company. And regular credit repair companies, like big ones like Lexington Law, they don't do stuff like this. But I'm saying like a lot of the people that you see on like social media or you might see on like YouTube and stuff, a lot of those people, this is the method that they're using because they're funding people and they want to get things deleted off of people's credit reports as fast as possible. But nonetheless, that's how a lot of people are getting such quick results and are getting letters from banks saying that they're going to delete the trade line from their credit report.
Nicole and Jay, do
Hey,
you
Jay.
ever go on class action lawsuits? The site called Class Action Lawsuits?
Have I ever been on it?
Yeah,
I don't know.
there is a lawsuit. Excuse me. There is a website called Class Action Lawsuits, and
Mm-hmm.
they have all the class action lawsuits that are going on, regardless if it's medical or using a product, medicine, whatever it could be. But the TransUnion is on there, Experian is on there, and Equifax is on there for a class action lawsuit that they're paying out on.
Oh.
And if people are involved in something of what they say, you contact those people and they contact you back, and you might have a check coming to you.
Yeah, that's exactly how I got a check from Equifax not too long ago. And honestly, anytime I get an email from these type of places, I always fill them out. And I swear to God, you guys, I get random checks in the mail all of the freaking time. I recently got like a settlement check from Capital One from I don't know what. I literally got an email said I was part of a class action. They're like, fill it out. I filled it out. They sent me a check. It was almost $500 for literally filling out an email that I got. Equifax, I got a few $100s from them as well for doing absolutely nothing. So when you get these things in your email, sometimes they go to spam because they're sending them out to a large amount of people. But read it, look at the email address, see who it's from, and fill it out because oftentimes they're just, getting your personal information, confirming that you are a part of it, and you can get a check. Just like Jay said, there's always going to be some sort of like something going on with the credit bureaus. Like they get class action lawsuits every year because there's so many errors and violations that they do because they try to use AI to make up for 75% of their staff. And the 25% that they do have left after AI took over, a lot of that is overseas. So very few of their employees are US based employees. And there is a big difference between US based employees and employees that are outsourced because when you're not from the US, you only know what they teach you. And we don't know exactly what they are told or what they are taught. They literally read a screen in front of them.
There was an article that I had read. There's a gentleman. He filed a federal class action lawsuit because one of the credit unions, when they so this call is being recorded, it's being recorded by AI,
Yeah.
and because of that, he's able to file this lawsuit that he didn't authorize AI to go ahead and record that conversation instead of the agent that he's speaking to. It's an outside agency, a third source that's actually recording it. That's somewhere else, and they don't know. And
Yeah.
what
And
if
that's
that
why it's
information
so
goes out?
important to record these type of events with a third party device, kind of like Vance was saying, is try to have an additional cell phone, old cell phone that, has a decent camera that can record this stuff, because this is the proof that you're going to need when you are seeking an attorney. There needs to be proof, and you can just let them know, yeah, I'm actually recording this. All right, any other questions for tonight, guys?
Just real quick, how you been doing with medical collections and removing those?
Actually, yeah, I just informed one of my clients today that her medical collection was gone. She's in the state of Texas. In the state of California, they are in the process of passing a bill that says if the medical collection is less than $500, then it cannot be reported to your credit report. So, a lot of these medical companies are getting smarter. Then they're trying to bill you for right over $500. For example, like Sutter just sent me a bill for my daughter and it's $504. I'm like, you son of a bitches. Because they know if it was under $500, they couldn't report that to my credit. So yeah. But even if here's the thing to think about with it when it comes to medical collections, okay? There's two forms of collections when it comes to medical. Oftentimes, there is a third party service provider that does not own the debt, that is just collecting on behalf of like that medical establishment or that doctor's office, right? And if you try to settle the debt, they're going to have to like go back to the doctor's office and see if it's okay, because they don't control the debt. They're just providing a service, right? And then there's debt that's sold to third party debt collectors. The debt that's sold is a lot easier to get off because they oftentimes don't have a lot of the records, and it can be confused with somebody else, and you can dispute it based on insurance, and they don't necessarily have all of that. So medical companies are getting smarter and hiring service providers to collect it so they can have the trail behind it, right? Because they can request the trail. And my thing with medical is a lot of people, when they get medical bills, either they're going to have to pay it because it's part of their deductible, and there are some out-of-pocket costs associated with medical, and you just have to accept it. But you have to also make sure that your insurance was billed correctly. A lot of people that don't have insurance because they can't afford insurance, there are programs out there that you can apply for. So I had this one client, and he had like a bunch of like hospital emergency bills because he did not have medical insurance. And the hospital actually had a program that he could apply for that wiped the debt out. Okay. So if that is the case for your clients, you can see if there's something that they can complete to rectify that. But you just have to kind of understand, and you can also request the billing for the bill and how it was calculated and how they came about that amount, and then they can verify it with their insurance. But sometimes there are out of pocket expenses associated if you have insurance.
Okay.
Sometimes we can run from them. Sometimes we can't. It depends if they want to go back to that doctor or not.
Mhm.
But now you can get on payment plans with a lot of these doctors' offices that are pretty low every month. Like, as long as they're getting something consistent, they're okay with it. Any other questions? All right, well, we're gonna wrap it up. I'll post the recording and the slides by Sunday next week. We're going to be wrapping up business credit. So I want to make sure if you guys have any questions, make sure to write them down for next week so we can talk about wrapping up business credit so we can really start on the business side of credit repair in the month of July, because there's a lot of things that go into building a business. It's not just learning how to do credit repair, because credit repair is very easy once you understand it. That's very, once you get it, you're like, okay, yeah, what's the next task at hand here, right? But building a business and being able to bring your audience off of social media and own the data yourself is very important, because if I have not shared with you before, I lost my Facebook account about 2 years ago, and it damn near took me out of business because I built my entire business platform on Facebook. I built a group, I built pages, and my Facebook account was hacked and I lost everything. I was running ads. It was my biggest performing platform, right? And I was so angry, and I was just, I was so mad. And I was like, how could this happen? How could this happen? And they not help me? And it just was crazy. This was all before, like, you can get verified and get help. And it looked like an email from Facebook, and I accidentally clicked on the link and I lost it. So it's important to be able to understand how to bring your audience into a, CRM by collecting their data, giving out free lead magnets to collect their email address, their telephone number, and ways to stay in contact with your clients. Some of the platforms that I use, we're going to talk about Go High Level. Go High Level is the #1 CRM platform that's white labeled for pretty much every company out there that would ever approach someone in credit repair saying that they have a CRM, or they have this, or they have that. Sometimes it could be lucrative for some people, but if they have not been in business for 5 years, don't trust it, because I did that with somebody and he went missing. And when that happens, you lose your account because it's under their account. So that's when I started my own account, started a brand new account. And there's a lot of things that you can do inside of Go High Level, include all of your websites, your landing pages, sales pages. The only thing that I don't recommend inside of Go High Level is your email marketing, because their deliverability is not the best for whatever reason. I don't know, but there's some other options out there. And I'll share with you guys the guy that I use for my emails, so that way you guys can start your email campaign, start collecting data, or even just start thinking about the platform that you want to use to start offering lead magnets or whatever, because you can run ads to a free lead magnet and start owning your own data, which it takes longer to produce from, but that's better for long-term success because you're building up a solid email list of giving value to people and then staying in contact with them by dropping value and just dropping some good content for them. So enjoy your weekend, everyone. Thank you guys for joining tonight, and everyone watching the replay, thank you for watching. I'll see you guys next week. Have a great weekend. Bye, everyone.